ExamPrep.School. Alaska Reinsurance Intermediary Broker Exam, exam code InsAK-RIB92 or OPRIB92. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Operating requirements for RIB, RIB qualifications, RIB records and record keeping. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. According to ASC 21.27. 70. Which of the following activities, when performed for compensation on behalf of an insurer, most accurately defines the role of a reinsurance intermediary broker? A. Underwriting primary insurance policies for personal lines business. B. Assisting an insurer in soliciting, negotiating, or placing reinsurance contracts. C. Adjusting claims arising under reinsurance agreements. D. Acting as an agent for an insurer and marketing direct insurance coverage. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is that a reinsurance intermediary broker under AS 21.27 (SATI) is someone who, for compensation, solicits, negotiates, or places reinsurance contracts on behalf of an insurer. The other activities fall outside that statutory definition. Reason A is not correct. Underwriting primary insurance policies pertains to direct insurance rather than reinsurance intermediary brokerage. Reason C is not correct. Claims adjusting is a separate function and is not part of the statutory definition of a reinsurance intermediary broker. Reason D is not correct. Marketing direct insurance coverage defines an insurance agent rather than a reinsurance intermediary broker. Question 2. Under AS 21.27 70, which activity requires licensure as a reinsurance intermediary broker? A. Serving as an in-house risk manager for an insurer's underwriting department. B. Providing actuarial analyses to an insurer for its direct insurance products. C. Binding facultative reinsurance placements on behalf of an insurer for compensation. D. Adjusting losses under a reinsurance treaty exclusively for the insurer. The correct answer is C. The correct answer is that binding facultative reinsurance placements for an insurer in exchange for compensation constitutes an activity requiring RIB licensure under AS 21.27. 70. The other listed services do not fall under the broker licensure requirement. Reason A is not correct. In-house risk management does not involve soliciting or placing reinsurance for compensation, and thus falls outside licensure requirements. Reason B is not correct. Actuarial analysis for direct products is not an activity defined as requiring RIB licensure under AS 21.27. 70. Reason D is not correct. Claims adjusting under a treaty is a post-placement function and is not defined as requiring a reinsurance intermediary broker license. Question 3. Under AS 21.27.01, which of the following must accompany an application for a reinsurance intermediary broker license to demonstrate the applicant's current financial condition? A. A financial statement audited by an independent certified public accountant covering the most recent fiscal year. B. Copies of all reinsurance treaties brokered in the previous 2 years. C. A certificate of compliance issued by the applicant's domiciliary state insurance commissioner. D. A detailed business plan outlining anticipated reinsurance placements for the upcoming year. The correct answer is A. The statute requires submission of an audited financial statement prepared by a certified public accountant to demonstrate the broker's financial condition. None of the other documents are specified as mandatory parts of the application under AS 21.27-20. Reason B is not correct. Submission of past reinsurance treaties is not a statutory requirement for the application. Reason C is not correct. A domiciliary compliance certificate is not expressly required under AS 21.27-220 for initial licensing. Reason D is not correct. A business plan is not listed among the mandatory application contents in the statute. Question 4. Sarah Lee is applying for an Alaska Reinsurance Intermediary broker license. Her history includes a misdemeanor conviction for misrepresentation in 2018 and an administrative license revocation by the Idaho insurance regulator in 2021. Under Alaska law, which background matters must she disclose on her application? A. Only the misdemeanor conviction for misrepresentation. B. Only the administrative license revocation by the Idaho regulator. C. Both the misdemeanor conviction and the Idaho regulatory revocation. D. Neither, since she is non-resident and the actions occurred outside Alaska. The correct answer is C. The correct answer is that both the misdemeanor conviction and the Idaho regulatory revocation must be disclosed because Alaska requires applicants to report all criminal convictions and any administrative actions by any jurisdiction's insurance regulator. Reason A is not correct. Applicants must disclose both criminal convictions and administrative regulatory actions, not just the conviction. Reason B is not correct. Applicants must disclose both types of events, not only regulatory revocations. Reason D is not correct. Non-residency and out-of-state events do not exempt applicants from disclosure requirements. Question 5. Under Alaska law, what must a non-resident individual applicant submit to obtain a reinsurance intermediary broker license via reciprocity? A. Maintenance of an Alaska-based trust account for reinsurance transactions instead of holding a home state broker license. B. Proof of home state RKIEI. B. Licensure in good standing. And payment of Alaska licensing fees without filing a consent to service of process. C. Evidence of a home state RIB license in good standing with requirements substantially equivalent to Alaska's and an irrevocable consent to service of process. D. Submission of a letter of clearance from any state regulator and designation of a non-resident process agent in Alaska. The correct answer is C. This option is correct because Alaska law requires non-resident applicants to hold a substantially equivalent home state broker license and file an irrevocable consent to service of process before licensure. Reason A is not correct. Non-resident brokers cannot substitute a trust account for the requirement to hold a home state license and consent. Reason B is not correct. Filing fees alone do not satisfy the required irrevocable consent to service of process under Alaska law. Reason D is not correct. A general letter of clearance and non-resident agent designation do not replace the statutory requirement to file a consent form. Question 6. A reinsurance intermediary broker headquartered in State X seeks to place reinsurance business in Alaska, but has not designated a registered agent within the state. Under Alaska law, which action must the broker take to comply with service of process requirements for non-resident RIBs? A. Appoint and maintain a registered agent in Alaska with a physical street address. B. Use a P.O. box in Alaska as the official registered office for service of process. C. File an irrevocable consent for service on the director without appointing an agent. D. Rely on the Alaska director as agent for service of process by default. The correct answer is A. The correct answer is that a non-resident reinsurance intermediary broker must appoint and maintain a registered agent in Alaska with a physical address to accept service of process, as required by AS 21.27/900. Reason B is not correct. A P.O. box does not satisfy the statutory requirement for a physical registered office address. Reason C is not correct. Irrevocable consent to the director does not replace the need to designate a resident Alaska agent. Reason D is not correct. The director is not automatically an agent of process. The broker must appoint its own Alaska agent. Question 7. Under AS 21.27 Hixis Waling, which of the following contract provisions is mandatory to include in their written agreement? A. A requirement for minimum financial strength rating of reinsurers. B. A clause detailing circumstances and procedures for contract termination. C. Provisions outlining record maintenance practices for the broker. D. Specification of geographic scope for reinsurance coverage. The correct answer is B. The contract must include detailed termination procedures as mandated by AS 21.27. To ensure both parties understand how and when the agreement may be ended. Reason A is not correct. Industry ratings are not a mandated element of the written contract under this section. Reason C is not correct. Record maintenance is governed by separate record-keeping requirements, not the content of the contract. Reason D is not correct. Geographic scope may be negotiated but is not specified as a mandatory contract element in AS 21.27 Spiked-on Windies. Question 8. Under AS 21.27. 9. What disclosure regarding contingent commissions must the written contract contain? A. A general statement that the commission varies without further detail. B. A detailed description of the calculation method and performance metrics. C. A guarantee of a minimum commission payment regardless of performance. D. A requirement that commissions be held in escrow pending audit. The correct answer is B. The statute requires the contract to disclose exactly how contingent commissions are calculated and which performance metrics trigger payments to ensure transparency. Reason A is not correct. Vague acknowledgement without specifics fails to meet the detailed disclosure requirement. Reason C is not correct. The statute does not establish any guaranteed minimum commission level. Reason D is not correct. There is no escrow mandate for commissions pending audit in the contract requirements. Question 9. Under AS 21.27, Reinsurance Intermediary Broker Contract must define the scope of authority granted to the broker. Which clause best satisfies the statutory requirement for limiting broker authority? A. A clause specifying a cap on the broker's commission at a set percentage of ceded premium. B. A clause mandating that the broker submit quarterly placement summaries and activity reports to the insurer. C. A clause authorizing the broker to bind reinsurance coverage up to $5 million per risk without additional insurer approval. D. A clause allowing the broker to appoint qualified sub-brokers and require them to meet jurisdictional licensing requirements. The correct answer is C. AS 21.27. Specifically requires that reinsurance intermediary broker contracts include a clause that quantitatively limits the broker's authority to bind coverage, for example, $5 million per risk. Commission caps, reporting requirements, and sub-broker appointments do not fulfill this authority limitation requirement. Reason A is not correct. Referencing commission caps addresses compensation, not the statutory requirement to limit the broker's binding authority. Reason B is not correct. Mandating reports addresses oversight rather than defining the broker's binding authority limits. Reason D is not correct. Allowing sub-broker appointments pertains to delegation, not the mandatory quantitative limitation of broker binding authority. Question 10. AS 21.27 requires that a reinsurance intermediary broker's written agreement include termination provisions. What is the minimum written notice period required for termination? A. 10 calendar days. B. 60 calendar days. C. 30 calendar days. D. 90 calendar days. The correct answer is C, under AS 21.27. At D, the written agreement must include termination provisions requiring at least 30 calendar days written notice. Notice periods shorter or longer than 30 days do not meet or align with the statutory minimum requirement. Reason A is not correct. 10 calendar days is shorter than the statutory minimum notice period required by AS 21.27. Reason B is not correct. 60 calendar days exceeds the required minimum and is not specified by statute. Reason D is not correct. 90 calendar days is longer than the statutory requirement and is not mandated. Question 11. During placement of a treaty reinsurance contract, a reinsurance intermediary broker is verifying whether South Star Reinsurance Ltd. is authorized to transact reinsurance in Alaska. South Star is domiciled in Bermuda and holds a certificate of entry in Alaska. Which action best fulfills the verification requirement before placing business? A. Confirm the validity of the certificate of entry by contacting the Alaska Division of Insurance. B. Rely on the reinsurer's NAIC financial data and proceed without further confirmation. C. Accept the reinsurer's home country license as sufficient for all treaty placements. D. Obtain an endorsement from the ceding insurer attesting to the reinsurer's eligibility. The correct answer is A. The correct answer is to contact the Alaska Division of Insurance to confirm that the certificate of entry remains valid and in good standing, as required by AS 21.27. Before placement. Reason B is not correct. NAIC financial data does not confirm that the reinsurer's state certificate of entry is valid in Alaska. Reason C is not correct. A home country license alone does not satisfy Alaska's certificate of entry requirement. Reason D is not correct. An endorsement from the ceding insurer does not replace the statutory requirement to verify authorization with the regulator. Question 12. A reinsurance intermediary broker is performing due diligence on Alpenglow Reinsurance, Inc. prior to treaty placement. The broker has obtained the insurer's latest audited financial statements, credit ratings, and surplus lines trust arrangements. Which additional step best demonstrates compliance with best practices for assessing the reinsurer's financial strength and reputation? A. Review the reinsurer's filings with the Bermuda Monetary Authority to confirm compliance with solvency margin requirements. B. Obtain a letter of credit from the reinsurer equal to 120% of expected liabilities. C. Conduct a site visit to evaluate the reinsurer's risk management and underwriting controls. D. Verify the reinsurer's membership status in an international reinsurer association. The correct answer is A. The correct answer is to review filings with the Bermuda Monetary Authority to confirm that the reinsurer meets domiciliary solvency margin requirements, which is a core component of financial due diligence. Reason B is not correct. A letter of credit beyond statutory requirements is an extra contractual protection, not a core due diligence step. Reason C is not correct. A site visit assesses operational controls but does not directly verify financial solvency ratios. Reason D is not correct. Association membership indicates industry affiliation but does not guarantee financial strength. Question 13. Under Alaska Statute AES 21.27. B. Before placing reinsurance with an unauthorized reinsurer, a licensed reinsurance intermediary broker must verify which of the following conditions? A. The unauthorized reinsurer has obtained surplus lines authority in Alaska and deposited a security of at least $100,000 with the department. B. The unauthorized reinsurer has a financial strength rating of B+ or better from an NAIC recognized rating agency. C. The unauthorized reinsurer maintains a minimum policyholder surplus of $50 million as reported in its annual audited financial statement. D. The unauthorized reinsurer has established a trust fund or posted collateral in the United States equal to 100% of its unpaid liabilities to ceding insurers. The correct answer is D. Alaska law requires that an unauthorized reinsurer secure its obligations by establishing a trust fund or posting collateral equal to its unpaid liabilities before placement. Reason A is not correct. There is no requirement for an unauthorized reinsurer to hold surplus lines authority or deposit $100,000 under this statute. Reason B is not correct. A financial strength rating alone does not satisfy the trust fund or collateral requirement for unauthorized reinsurers. Reason C is not correct. Policyholder surplus minimums are not specified in AS 21.27 for unauthorized reinsurers. Question 14. A reinsurance intermediary broker collects a $100,000 premium from an insurer on behalf of a reinsurer. After reconciliation, the broker determines a $15,000 overpayment must be returned to the insurer. According to Alaska law, how must the broker hold both the initial premium and the refunded amount until proper disbursement? A. Place the $100,000 in a trust account for the reinsurer and deposit the $15,000 refund into the operating account until the refund is finalized. B. Hold both the $100,000 premium and the $15,000 refund together in a separate fiduciary trust account with distinct ledger entries for each. C. Deposit the $100,000 premium into operating funds immediately and hold the $15,000 refund in trust until the insurer requests it. D. Net the $15,000 overpayment against future premiums and hold the resulting $85,000 balance in the trust account. The correct answer is B. This option is correct because Alaska law requires premiums and any return premiums to be held in a fiduciary trust account separate from operating funds, with clear accounting entries until funds are disbursed to the reinsurer or returned to the insurer. Reason A is not correct. Splitting the refund into the operating account violates the requirement that both premiums and return premiums remain in fiduciary trust until disbursement. Reason C is not correct. Depositing the premium into operating funds conflicts with the prohibition on commingling fiduciary funds with earned income. Reason D is not correct. Netting the overpayment against future premiums bypasses the duty to maintain accurate records and promptly return the full refund owed. Question 15. Under AS 21.27.690 inches, which type of institution must a reinsurance intermediary broker maintain its separate trust account for premiums and funds? A. A bank or trust company organized under the laws of any U.S. state, regardless of federal insurance status. B. A foreign bank with a U.S. branch that is subject to U.S. jurisdiction, but not necessarily federally insured. C. A bank, savings association, or credit union authorized to do business in the U.S. and insured by the FDIC or NCUA. D. Any financial institution approved by the director, including non-depository trust companies without federal insurance. The correct answer is C. This option is correct because Alaska law requires RIBs to hold premiums in a separate trust account at a U.S. authorized depository institution insured by the FDIC or NCUA, ensuring federal protection of fiduciary funds. Reason A is not correct. It fails to require federal insurance coverage and omits credit unions, which are explicitly permitted under the statute. Reason B is not correct. Foreign banks, even with U.S. branches, do not meet the requirement for a U.S. authorized institution, insured by FDIC or NCUA. Reason D is not correct. Non-depository trust companies without federal insurance do not satisfy the statute's requirement for a federally insured depository institution. Question 16. Gulf Reinsurance Intermediary Broker recently transferred a controlling ownership interest to a new partner and simultaneously revised its compensation agreements. Under AS 21.27. Within what time frame must the broker notify the director in writing of these material changes in RIB operations? A. Within 10 business days of the changes occurring. B. Immediately upon the changes occurring. C. Within 60 days of the changes occurring. D. Within 30 days of the changes occurring. The correct answer is D. The correct answer is within 30 days because AS 21.27 requires a reinsurance intermediary broker to submit written notice of material operational changes, including ownership transfers and compensation revisions, to the director no later than 30 days after such changes occur. Reason A is not correct. That shorter 10 business day period applies to other filings but not to material change notifications under AS 21.27. Reason B is not correct. Immediate notification is not required. AS 21.27. He specifies a 30-day window rather than real-time reporting. Reason C is not correct. A 60-day period exceeds the statutory 30-day deadline and is therefore too long for reporting material changes. Question 17. Under AS 21.27700, a reinsurance intermediary broker must retain copies of which of the following records related to reinsurance agreements? A. Evidence of authority letters, claims adjustment guidelines, and trust account reconciliations. B. Contract binders, reinsurance confirmations, and treaty endorsements. C. Premium finance agreements, policyholder credit evaluations, and loss run report. D. Appointment letters, licensing correspondence, and marketing materials. The correct answer is B. This option correctly lists the key reinsurance agreement documents binders, confirmations, and endorsements that RIBs are expressly required to keep under AS 21.2700. Reason A is not correct. Those items include trust account reconciliations and claims guidelines, which are not classified under the specific list of agreement documents. Reason C is not correct. Premium finance agreements and loss runs are not part of the core contract, binder, or confirmation records defined in the statute. Reason D is not correct. Appointment letters and marketing materials are administrative but not among the required contractual records. Question 18. According to AS 21.27.700, which accounting record must a reinsurance intermediary broker maintain for each reinsurance transaction? A. A general ledger entry detailing each premium cession, commission receipt, and fee payment. B. An annual audited financial statement prepared by an independent CPA. C. Detailed claim subrogation logs and policyholder loss exposure analyses. D. Underwriting guidelines, documentation, and reinsurer rate filing communications. The correct answer is A. This option identifies the statutory requirement that brokers keep accounting entries for premiums ceded, commissions collected, and fees charged for each transaction under AS 21.27C700. Reason B is not correct. An audited statement may be regulatory in nature but is not the specific transaction record mandated. Reason C is not correct. Claim and exposure analyses are valuable for underwriting, but not the required broker accounting records. Reason D is not correct. Underwriting guidelines and rate filings relate to underwriting standards, not transaction accounting. Question 19. Under Alaska Statute 21.27700, for how many years must a reinsurance intermediary broker retain its records before lawful disposal? A. 3 years. B. 10 years. C. 7 years. D. 5 years. The correct answer is D. The correct requirement under AS 21.270-700 is that all RIB records must be retained for 5 years after completion of the transaction before they may be disposed of. Reason A is not correct. This period is too short. Alaska law requires retention for a longer duration than 3 years. Reason B is not correct. This overstates the required period. The statute specifies a shorter retention timeframe. Reason C is not correct. This exceeds the statutory requirement, which is not as long as 7 years. Question 20. A reinsurance intermediary broker has noticed occasional discrepancies between its recorded premium remittances and insurers' remittance advices in its RIB records. To ensure accuracy and completeness of its records, which procedure should the broker implement? A. Conduct an external audit every 2 years relying on random sampling to verify record integrity. B. Reconcile reinsurance contract ledger entries with insurers' remittance advices on a monthly basis and investigate any discrepancies promptly. C. Implement daily backups of the electronic record database without establishing reconciliation checks. D. Perform manual reviews of all newly entered data at the end of each calendar year to confirm completeness. The correct answer is B. The correct answer is to perform monthly reconciliations against insurers' advices and promptly investigate discrepancies, which provides ongoing verification of both accuracy and completeness of RIB records. Reason A is not correct. Infrequent external audits allow discrepancies to persist for long periods without timely detection. Reason C is not correct. Database backups protect data from loss but do not verify accuracy or detect inconsistencies. Reason D is not correct. Waiting until year-end delays detection and correction of errors, risking incomplete or inaccurate records for extended periods. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.